We met with the ECB recently, and obviously part of our discussion, a large part of our discussion, was around the non-performing loans, because what we wanted to get at was the extent of the pressure from the ECB on yourselves in terms of the sell-off, and we spoke in particular about project loss as well and the impact that was having. They made it abundantly clear that they were not in any way instructing the sell-off. Now, I think everyone gets it in terms of the reduction of the non-performing loans, but I think it's quite astounding that you have the list of options, and yet you have 5 options within that, and as my colleague Deputy Doherty pointed out, all of the options from A to K. Why do you think they're there if in the Code of Conduct, and if they're not being used? And are the ECB aware that you're using a very limited number of options?
I think it might help the committee if I try and just explain a couple of elements. The list of treatments which were read out to me by your colleague were from the regime that we were under with the Central Bank of Ireland, where our governing objective was to find as many long-term treatments as possible. Irrespective of whether we've done them or we didn't do them, all of those treatments would mean that those loans are still NPLs.
But why aren't you using everything?
All of those treatments are NPLs. So then let me answer your question. All right. So the second question is around the ECB not being prescriptive in terms of what we can and can't do, and that is true. Right. That's absolutely true. But our NPL ratio is totally unsustainable, and it's dangerous for Ireland. So I think I can say that as a guest in Ireland. I think I can be perhaps more objective than most.
Can you explain how it's dangerous?
Our NPL ratio is really, really dangerous, and we need to spread the risk.
Just explain that, how it's dangerous for Ireland. Just explain that a bit further.
Because the risk of the assets, if there's another economic shock, those assets are likely to be assets that will cause us real difficulty in terms of our capital base. Banks need to have low NPL ratios. It's a regulatory requirement for us, and I quote, to have ambitious but credible. They're the words that are used. Plans to reduce NPLs, and PTSB is an outlier, and therefore we have to look at all alternatives. In my opening remarks, I explained to you the different alternatives that we've considered, and we're very clear that a loan sale is the least worst alternative. And I suppose there's one data point that I asked the team to get me, which I thought was quite interesting, actually. I asked the team to get me the historical Irish average of bank NPL ratios in the 90s and the 2000s, just to get a comparator, because at a time when we're talking about NPL ratios, and it was less than 1%, right? Ours is 16. So I just think we need to all take a step back and agree what we're trying to do here. So from my perspective, I'm trying to do the right things for the taxpayer. And as I have a quote somewhere, I think, from last week.
But don't you think that the banks played a big part in that, and banks like yourselves, in terms of reckless lending in the first instance, and then in terms of people losing their jobs and being put in the financial situations they've been put in because of the nationalising of the private debt of the banks? Well, this isn't, we have to look at the causes here. Why the level of non-performing loans is as high as it is, and the banks played a very, very, very active part in that. And now you're coming along, and this is what really gets to me is now you're coming on. You have a suite of options there, and you're deciding, well, no, we're not going to use 5 of them.
But they're still NPLs.
That's what I have the problem with.
Sorry, that's the point I'm making. Apologies if I'm not making myself clear. Those suite of options are long-term treatments. If we go back in time, in 2012, the Troika, the Irish government, and Irish public policy decided that the banks must avoid scale repossessions. That was the policy decision. And as a consequence of that, the Central Bank of Ireland asked all banks to put in place long-term treatments, which Shane has been at the vanguard of. The point I make is that in this world we live in, those long-term treatments are still non-performing loans. Just because they're treated, it doesn't mean they're not non-performing loans. They're still non-performing loans. That would be the first point. The second point is a non-performing loan ratio of 16% for a state-owned Irish bank. As the Governor said, the transfer of credit risk and funding risk to investment funds to buy loan portfolios constitutes a national reduction in macro financial risk. And that, for me, is a really critical point. So we have run out of options in terms of reducing our NPL ratio. We've looked at all the different alternatives, and as I say, the loan sale is the least worst alternative on the basis that the protections travel with the loans.
Yeah, I don't think that you have, so I don't share your opinion of that in terms of enabling people to have security within their own homes and to give people a chance. But I want to put a couple of other things to you.
Yeah, of course.
Just because we have a limited time here, did you speak to Smart Mortgages about their non-attendance here today? Did you have any discussion before today? At what point did you know that they weren't going to be here with you? Because I think for us to have yourselves here today and to have them here would give us some reassurance, or you know, we could have some guarantees on public record from the organisation that you're passing these loans to.
I haven't spoken to Start Mortgages, and neither would I want to. I can't put myself in the shoes of Start Mortgages.
Does it concern you?
I beg your pardon?
Does it concern you at all?
I make no comment. I looked it up this morning. I think this is the 12th time I've been in front of this committee, other than when there was a closed period when I actually couldn't come legally. I have been here every time that you've asked me. I will continue to come because I think it's an important part of the process. You see, so from my perspective, if you don't mind, I'm not going to put myself in the shoes of Star Mortgages.
Yeah, well, you can understand from our position, you see, that we're given these assurances that, you know, everything is going to continue the same, and the same from the Minister for Finance, that there's no concerns here, and yet they won't appear before an Oireachtas committee. So what do they have to hide? And that's what rings alarm bells with people, and people who have these loans, and how they're going to be treated in the future. So if they treat an Oireachtas Finance Committee in the way that they do, how can we expect them to treat a homeowner with any respect? You know, that is the question for us. When is the last time you met with the Minister for Finance?
I meet with him regularly because he's 75%. He's my largest shareholder, obviously. I meet with him regularly to discuss anything ranging from, you know, performance, mortgage market share, NPLs. I would have met him on part of a regular cycle, maybe a month, 6 weeks ago, probably.
Okay. And he has no concerns whatsoever in terms of how you're choosing to reduce the NPLs? No.
I can't comment in terms of Minister Donohue's perspective. I'm just going to bring it back to Permanent TSB. My job is to get the best deal for all Irish taxpayers, and that's what I continue to try to do.
And for the people who are in their homes at the moment. Are you concerned that Smart Mortgages may decide to flip these mortgages on to somebody else, a non-regulated entity? Or have you discussed that within the transfer arrangements?
That's a hypothesis. I'm not going to speculate this morning.
So it's basically up to them to do what? So really we have no guarantees, because they could make that decision. There's nothing whatsoever from restricting them making that decision to flip them over at any time.
I think that's an unfair question. I'm not going to speculate on how Start Mortgages run their business. What I do know is that this bank has avoided enormous repossessions. I know that this man here has spent the last 6 years of his career working with customers to try and find long-term solutions. I know that I'm a regulated entity. I know that the European Central Bank holds my banking licence. I know it's important that PTSB competes and provides finance for the next generation of homeowners. I know that we've looked at all the alternatives, and I know that the loan sale is the least worst alternative. And I know that the Governor has assured this committee that the protections travel with the loan. That's all I can say.
Can you see from our point of view, you see, you're giving us reassurances that, the homeowners are going to be protected. And really, when you scratch the surface, they're not going to be protected at all. So they're certainly not going to be protected from the flipping over of the mortgages to somebody else, and they won't even come before the committee. So you can see where our concerns are coming from. I just need to get again to because I'm really concerned about this, where you have the performing loans, homeowner paying their mortgage diligently, may have bought another property and been enticed by the bank to buy another property, mind you, during the boom and all that, and then have got into trouble with that mortgage. Are they two separate contracts? If somebody has their home and then they decide to buy another home, are they two separate contracts?
I fear I'm going to really annoy everybody, actually, because I suspect the worst witness that you have is someone who just keeps repeating themselves.
No, I know but really, just indulge me.
First of all, I just want to apologise, because I'm afraid I am going to be a long playing record. I don't know what else to say. This is a regulated bank. A regulated bank is defined by its banking licence. Its banking licence is given, and it has to apply the rules. The rules of NPL definition are given to us. The rules of NPA...
I know. Please don't. That's not the question I asked you. The question I asked you was around the details of the contract.
The rules of NPA definition say, even if there are two separate contracts, and one of them is an NPL, and they are collected either through cross-collateralisation, right, or cross-default, one's gone into default, the other one hasn't, I'm afraid that the rules say it's the connection that becomes the NPL. So I'm sorry, Senator, I don't really know what else to say.
I just think that's grossly unfair, and I think it puts people in a very precarious position. They've been enticed in the first place, in many cases, into investing rather than a pension in a separate property, and now their own home is at risk when the mortgage is being sold off. So
the best thing I can do then is I acknowledge your comments, and I hope you would do the same for mine.
But I'm just, I'm not reassured. I want to ask you, what have you done with the properties around the buy-to-lets that you've taken back?
So they are known as properties in possession. The bank is not a property company. The bank has an obligation to put these properties into the market as quickly but as sensibly as it can. So with that as context, Shane, perhaps you might just give a bit more detail, if you agree with that as context.
I do, yes. Okay. So we're actively selling those properties. So far this year we've sold about 500 properties. We have a stock of just below 1,800. 330 of those properties are currently at sale agreed. There's a further 400 properties that are for sale at the moment, and there's a further 400 that we're preparing to sell. So the bank is actively looking to put those properties back into the market.
Did you offer those to government to form part of the housing solution?
We've been speaking to the housing agency, so they're actively looking at a number of those properties.
Have they bought any of them?
Not yet, but we are moving close, we hope, to an agreement on a portion of those properties.
And are you selling them at a discounted rate to government?
We're selling them at market price. It's our obligation to secure the best price possible on behalf of the borrower, so that we can minimise any shortfall if there is any upon sale.
But the borrower is out of the picture at this stage. But obviously they're the assets that have been reclaimed.
Yes.
And you're owned by, are mostly owned by the taxpayers, so by citizens.
That's right.
By
so
government.
In totality, the 1,800 represent properties that came back through the voluntary surrender campaign and more generally. So the onus on us is to secure the best return for our shareholder, which in large part is the state and is the country's taxpayers. So we're looking to sell those properties at market rates.
Would you see that you have an obligation to contribute to the solutions of the housing crisis because of the part that banks like yourselves played in the housing crisis in the first instance?
I think practically what we can do is put these properties, the 1,800 that we have at this stage, back into the market as quickly as possible. That's something we're actively doing, whether those properties are vacant or whether they're tenanted. If they're vacant, they tend to work for first-time buyers and trading up buyers, and if they're tenanted, they work for people who want buy-to-let properties. So I think that's our duty, and that's what we're doing as expeditiously as possible.
And is there any protection in there for tenants then? So if you're selling off, with a tenant property that has a tenant living in it?
Yeah, so we'll honour the tenancy guidelines, so absolutely that is our duty, and we adhere to that.
When did you start offering these properties to government?
From recollection, around March, I would say, of this year. Don't hold me to that, but early part of this year, I would say.
And none of the purchases have been completed by government?
No, not yet. So we have a substantial number of offers. They've been approved by Permanent TSB in principle, but through then to actual execution, we're not there yet. But
so we're 8 months out. We're in a housing crisis. And you offered them to government 8 months ago, 8 months ago, and they still haven't completed any transaction.
Again, I think that's a question for somewhere else. Our duty is to offer these properties to different interested parties, and that's what we're doing.
Yeah, I mean, I think that's something, Chair, that we need to take up. If it's taken, it's no wonder we have a housing emergency. If it's taking 7 to 8 months to reach agreement on some of these properties when we have 10,000 people homeless, I think it raises wider questions there. I just have to refer finally to your comment around the rating agencies like Moody's have welcomed the move. Moody's? These were the ones that told us that Anglo in 2008 sounds profitable and good credit quality supported by rigorous lending approach. And you tell us that your actions are approved by Moody's? Do you not see the irony?
I mean, I can't comment on your perception of the rating agencies. What I would say,
it's not my perception. It's the fact of what their assessment of Anglo was.
I wasn't here, so I can't comment. Perhaps the rationale for explaining why I put that comment in there. At the end of the day, what we're trying to do is make the bank safer. If the bank is safer, we get access to a broader base and probably better value funding. If we get access to a broader base and better value funding, it means that we can support the next generation of Irish homeowners, and that's how the whole thing connects. So the point of principle is around trying to make banks safer. I make no comment on your observation around Moody's. That's not for me to say.
I wouldn't say an endorsement by Moody's is an endorsement that carries any weight. Thank you, Cahill.